Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.
Welcome to the closing beat, everybody. Come on, let's see what we got there. I don't know why it didn't work today, but there we go. Hope you're having a great day here so far. This is our quick stock market update show that we do to help you with your dough, help you with what the markets did today, kind of go over some things. And usually I try to teach a little something in there if I can. I got something special for you today. So we're financial advisors here at Jazz Wealth. We're always watching the markets, and we just like to share that with you guys as well as our customers. We're also playing a game. I mention it every day here. Go to the jazzwealth.com/guess the Dow and take your guess. Where do you think the Dow is going to finish next week's closest without going over? We'll send you $100. Simple as that. If you're one of our customers, we'll credit your account. No catches, no purchase necessary, no nothing. Just play along if you like, and we'll see who gets closest. We announce the winners Fridays here on the closing beat, but you don't have to be present. If you win, we'll email you, get your address, and we'll send it on over to you or credit your account. Also, tomorrow night, our class for customers is going to be on loss statistics for the S&P 500. It's a little geeky. All right, I'm going to try to keep it really simple, but just average market declines, how that happens, recovery times, length of time to recover, best asset classes to own in recovery. Is there any one asset class that stands out over history just as being somewhere you want to be? Just always trying to give our customers the leg up either to as what we're doing here for them or things that they may want to know. So that'll be tomorrow night. Email invites should go out tomorrow morning, actually. All right, let's take a look at the stock market. You got the Dow lower by 9, S&P lower by 3, NASDAQ higher by 25, a little split there, but basically sort of flat. If you look at the Dow and the S&P, still negative on the day, which brings us to an interesting point here. The S&P 500 has now fallen for 3 days in a row after hitting 52-week highs. You ever question that? You ever wonder, is that normal? Should that happen more often? Actually, this is only the 11th time in history. So let me take a second and show you on the chart. So you have the other day, we broke out to those new 52-week highs, celebration, everything was exciting. But since then, we've fallen for 3 days in a row. Not really a big deal, in my opinion. But if you look back in history, you can only actually find 11 other times where the markets moved up to new 52-week highs. They had to be below it for at least 4 weeks. They moved up to it and then fell for the next 3 days. In the entire history of the S&P, back to 1928. And so some geeky stats for you. 91% of the time, the market the S&P is higher than this 52-week high 3 months later and 6 months later. Stats are exactly the same. So 91% you got a 91% chance that 3 months and 6 months from now, the stock market's going to be higher than that little 52-week high push that we did just the other day. Anyways, that's what I have for you there. We got G20 meetings. Going to be rather interesting and probably rather volatile going forward. So you might not want to miss the rest of the week. And then President Xi and Trump meeting that they're going to do, I believe is still set for Saturday, if I'm not mistaken. So let's go over here to the markets and take a look. The S&P 500 is pulling back. No big deal. NASDAQ 100. Interesting. Some of your cyclical tech names, they were strong today. Remember that conversation we've been having the last couple, 4 days now, to say how defensive stocks brought the stock market to new highs. Your cyclical and your cyclical stocks lagged behind. Still did well, but they lagged behind. Look what happened today. You got a lot of your tech names there showing a little support. We'll go over a few of those, but that's where the NASDAQ's at. The Dow, just a fraction lower here, continues to pull back. Remember, it went a little too far, too fast, in my opinion, which is just that. It's just an opinion. And so we've been saying, hey, a little too far, too fast. Take a break or pull back. And so yesterday I really tried to highlight that whole idea of your defensive areas starting to pull back. And if they did, what would happen to the stock market? It's actually playing out day by day sort of perfectly there. If we go into the individual sectors, you can see on the dojo here, if you want to go along, this is a little platform we offer to our customers. It's ours. You can go inside there. You can follow along with the different symbols we're looking at. This watch list will be here for you. And then, of course, our video library is there if you want to see our older classes that we've done previously. But if we take a look at the SMH, on one hand, you've got these sort of cyclical stocks. They're moving higher. They had a great day today. So semiconductors, XOP, I don't actually have XOP in there, but let's go look at that. Your oil stocks over here, oil explorers anyways, they had a good day, about 3% on the day, 3.5%. You've got tech stocks, XLK, we like to use to check that out. You can see it over here, 1%, energy 1%, transports up basically there, almost 1%. They all had great days when they've been the laggards. So just as we talked about, your cyclicals, or your defensive stocks, all the way down here at the bottom, they've been taking a break. Utilities, REITs, you can use any ETF for that. Consumer staples, healthcare, all in order. Isn't that funny? Like the four names that we've been talking about as leading the markets higher, when they took a break, the markets take a break, and that's totally to be expected and helps you kind of understand that, okay, that's normal, right? Dustin walked me through it as it was happening versus tell me afterwards. He walked me through it, and now that I see the markets falling today, I'm not going to fall for what I see on TV, that things are scary, things are weak. Right now, it's those four sectors. They let us higher, and they just take a break. They're pulling back here, and so there you go. That's basically what I wanted to say. All right, so semiconductors were higher today, mostly because of Micron Technologies. We talked about this. They reported earnings, beat on earnings, a beat on revenue as well. The big thing, they said we're going to reduce our capital expenditure. And I think I know that was celebrated today, but I think if you look under the surface, why would you do that if demand wasn't there, right? If demand was there, you'd keep growing, you'd keep pushing. So I think that's going to be maybe a negative in the sort of the mid to long term there. We'll see, but MU makes up about 4% of the SMH, so a lot of support there. You also had Intel higher on the day. I'm jumping all over the place. You had Intel higher on the day and Texas Instruments also, so that helping out your semiconductors if you've been wanting that area to bounce. Remember, we talked about this decline, showing that this rally is not one that moves back to new highs. If you've been watching us for a while or just started watching us here and you want to kind of see how I try to share with you ahead of time what to expect, you can go back and kind of see our discussions on that one. And that's, sort of playing out. This is, to me, as expected as well. And I'm just one of those guys that I look for a reason to either get excited or panic. And I don't see anything out of the ordinary here, so I have no issues with that. We talked about XOP a second ago, so that had a good day today. A lot on the oil inventory numbers. They were way off on those numbers. So crude oil numbers came out. It was a drawdown of almost 13 million barrels. We were expecting a drawdown of 3 million barrels. 10 million barrels off. That's the biggest spread there in over 3 years, right? Just about 3 years. So, that helped the price of oil today. Another strong day, which, by the way, if you follow that, is officially pushed through the 50% retracement area from highs to low. So it's recovered more than half of May's declines, but also that 50% retracement there has been sort of taken out as well. All right, so you got energy. That was helpful today with the price of oil. Now, on the flip side, on the downside, there's really not much for me to say that wouldn't be repeating everything that I normally say. Utilities have been a market leader. They are taking a break, sort of a nasty one there, right? Real estate, REITs, they have been a market leader, second strongest area of the market. Not anymore. They have pulled back here. Totally normal. Maybe that's a little more aggressive than you'd like to see, but what led the market higher is now starting to sort of hurt the market on the downside. Consumer staples, right? Market leader to the upside. It's just pulling back, right? Where's all the weight, that heaviness, that drag, the parachute on the back of the car? Where's it coming from? These four sectors right here. XLU, REITs, XLP, and XLV. Healthcare is XLV. Also pulling back here as well. They've all been overbought. Some of them, like utilities, have been overvalued. And so it's totally normal. You've been hearing me kind of say this day after day. Overpriced, overvalued. Totally normal, right? To see them pull back. So I think you'd be okay with that. If you happen to own any of these for a while, you're like, all right, let's take a little bit of a break there. All of them lower by 1% or more on the day. As far as the S&P 500, you got 58% of the stocks above the S&P. That number is fading slowly. We started in the 60s. We came to the low 60s. We're now in the high 50s. So a little bit of a struggle there. And a lot of that is due to your leaders, the weakest part of healthcare, the weakest part of consumer staples, the weakest part of your, not really any utilities, REITs or utilities. But the weaker areas of these sectors are starting to fade away just a little bit, not a big deal just yet, we'll keep you posted there. And so that's what we have overall as far as the markets go. I'll say it one last time. You had those 4 sectors down here at the bottom leading you to new highs. They have decided to take a break. These other areas of the market are playing catch up. Now, what does that mean? Like going forward, you go, okay, so does that mean that the stock market is waiting on these defensive names to come back and that'll push the markets higher? Not exactly, right? What's happening in the stock market right now is you have those defensive stocks that ran up a hill, right? Well, I use this all the time. Ran up a hill. They need to take a break. They're sitting down. Well, while they're sitting down, you've got semiconductors, you've got energy, you got tech stocks. They're all running up the hill now. They don't need a break. So they're helping sort of stop us from really falling. When utilities and consumer staples and healthcare, when they get to standing back up and everybody runs together, it could be a really good sign. We'll see, but I mean, it could be a nice little support to the market upside, especially if we got some of this geopolitical news out of the way. Hence, or in other words, the G20 meetings. Tomorrow, we have GDP numbers coming out. That's going to be a market mover. The good news is it'll be before the markets open. We also have ConAgra reporting earnings before the market opens. Walgreens, Boots Alliance, and Nike. Nike will be the big focus there, expecting 66 cents a share and a little bit of clarity on some of the China trade news. So we'll see. I don't know. We'll see how that goes. A couple things in the news. Pretty slow news day. Almost all day. They were just talking about The Office. Oh my God, Netflix is losing The Office. NBC's going to pull The Office from Netflix. It's sort of how you could tell it's a slow news day. That's normally like a little blip on the screen at the bottom. Instead, they were having like whole roundtable discussions on Bloomberg and stuff. Really? I must have missed the importance of that. Anyways, so Netflix really didn't do anything. It doesn't really matter. Target down just a little bit here on the day. So they're going to do the 2-day free shipping, and it will coincide with Amazon Prime Day. So Target really trying hard here to sort of take more of that online presence from Amazon. I wish them luck, man. I like Target. Tesla. Shares didn't really move all that much, but Elon Musk says that the second quarter is likely going to be a record for the company as far as delivering cars. So I think he tweeted or something that they're going to go all out, right? I put the quote down below. They're going to go all out in the last couple days here of the quarter so that they can beat expectations. We'll see, right? Another one. You kind of like the guy. You want to root for him, but it's a little tough. General Mills, minus 4.5% on the day. Reported earnings, revenue came in weak. That was sort of the weak spot there. This is a consumer staple, right? So you don't want to see revenues struggle there in a consumer staple. That definitely did not help your XLP down here support that one. So no problem there. And Bitcoin, if you like Bitcoin, what a move today. Stupid blow off, like sort of, not even a blow off top, just a big old move, 20+% in Bitcoin. So definitely people talking about that again. John Deere paying out a dividend, 76 cents. That's coming our way. We have that in our portfolios. Always nice to see that. A couple other names, some of the small cap names as well. They're not as exciting, but they're paying dividends, and we own those as well in our small cap fund. And remember, L3 is getting replaced in the S&P. I don't know why, actually. I didn't look at it. But they're getting replaced in the S&P by, I forget the name. Is it MKTX? Was that them? Yeah, MKTX is replacing them. Strong stock. All right, if you have any questions, I'm happy to answer those questions now. I'll take a look over here, make sure I can see your questions, and then we'll go from there. Lots of REITs near all-time highs. Yeah, I mean, it was been a pretty nice pullback if you've been waiting to find a discount there or find a pullback in the REITs. But there's still a lot of really strong ones out there. I got you. Yep. What do we got here? Would you buy FedEx at these prices? I can't tell you, whether to buy it or not. If you're a discount type person, you like that it's trading here near the lows. You know what I mean? If you're an ultra short-term person and you look at that reversal that happened today, there's a reason that technical traders will try that as a bottom. But I can't say specifically. And it's too tough, right? If you guys ask me, what do you think of this stock or that stock? My answer is always initially going to be, obviously I can't tell you, but my initial answer is always going to be, well, what do you mean? Like short-term, long-term? where's the focus? If you're investing in it and you've got 10 years or whatever, different story. If you're thinking, oh, look what happened to FedEx today. Maybe if I buy it, I can see it go back to 170 and sell it there and make a quick profit or something. Well, that's a whole different story. If you're investing, obviously it's a different story. So we'll always try to pose the question that way. Hey, I plan on buying this stock. I think it's going to do something in the next 2 or 3 weeks. Is there anything there that says that should happen? Then we can really get specific there. And I love answering those questions as much as I can. Deadlift says, hey, Dustin, is there any way to follow a class of yours when non-U.S. Oh, my gosh, that's crazy, man. People all over the world. I love it. Belgians watching the show. Or your class is not online. Well, so this one's, I mean, I guess you know this one's like, if you mean the classes that we do for customers, so they're all recorded and archived. I can't actually share them public because I go into more detail, and I'm allowed to go into more detail because I know the suitability of whatever I say to those customers. That's a big rule here in the States. Like, you'll never hear me say, I think you buy this stock at, $80 and try to sell it at 90. I'm not allowed to do that because I don't know if all of you can actually afford to do that. And what if you take too much risk? What if you bet your whole account on something that I said as a registered financial advisor? I'm in big trouble for doing that. So those classes can't be public. Occasionally I'll do one that I'll be careful and we'll do it publicly. But that's why I don't offer like a subscription to it or something. I'd get in trouble. What's the likelihood of a China deal? Actually, I don't know. I don't know what the stat. Now, likelihood of a deal on Saturday, almost non-existent. I know, what was his name? The Treasury Secretary, Mnuchin. I know he said the deal was like 90% done. That's not what China's saying. I watch this stuff every night. I don't sleep, and I'm watching what comes out of the Chinese media. They don't feel the same way over there. I don't think they would say 90% done. They're sort of like, America sucks for making us go through this, and we're not changing our ways. At least that's what they report on their media, and I understand how their media works. I just find it interesting to watch. Jin, oh, was that you from yesterday? No, it wasn't the Facebook calls, was it? So Bernhardt, 197.50 calls. Yeah, you can't buy out of the money like that. You got to be very careful. Unless you bought it like on that earnings day way back, April 25th or something like that, you got to be real careful buying out of the money calls that you don't plan on getting out of quick. Right, you almost got to be really. Oh, you bought on 628. You bought on Oh no, expire 620. I'm sorry. Yeah. Well, you're out of time basically. You got. that's probably the reason why you're burned. You got no more time. You need a really sharp move in Facebook. You need some news really. At this point, what'd you do? You paid 80 cents for them. 197.50 calls by a good cost. They're trading at 50 cents. If you're saying they're trading at 50 cents, that might be a little bit of a blessing there. That you have that much left in premium. I can't tell you what to do, but blessing would be the key word there. Think MU is going to fill the gap. So MU is one of those stocks. The MU is a stock that likes to fill gaps and has for as long as I can remember. AMD also, by the way, if you follow those categories. Do I think it'll happen by next earnings? That's a tough one. I just think everybody was a little optimistic here because of the reduction in spending. I don't think that translates to the shareholders. It's maybe a whole video there, but I mean, obviously today I would be wrong. FedEx for a dividend portfolio IRA, buy initial position now and scale. Oh, there you go. So you like the opportunity to add into it. So again, in that case, I would say you must be the type of person that likes a discounted stock versus the people that say, I want to buy, on the way up and sell higher and all that. So you're the person that likes a discounted stock. Now we can get more specific and say, you can go back a year. This is about as discounted as it's going to get. So if you kicked yourself last time when it was down around the 150 mark, I could understand why you'd want to scale in here and almost hope that it breaks that low and scares people for a little bit. I like it. I appreciate it, Detlef. Hopefully I said that right. Thank you, Andres. How do you feel about investing into Altria since it's close to lows? Well, I mean, if I'm assuming there's you have no social issues with that. I know that's popular. That's why I try to address it. But same thing. You got a stock that's falling here. I did a video last week on how to buy a downtrend. the couple different ways you can look at it, I'd probably refer you to that because you don't want to fall into something where you're just guessing at a bottom and you say, well, I'll scale in, but then scaling in gets a little bit expensive. So you might look at that video. I put 3 different ways of how you buy a downtrend and take your shot. So that might be something for you. Yep. I'm a discount guy, so I like what you're looking at. The timing of it might be more interesting to you. What exactly would the S&P do if we don't get the cut next month? I have no idea what the market will do. I could tell you that if they do cut, historically, that first month is very positive. After that is nothing but negative. We put that in our portfolio update for our customers last month in the dojo because it's not a good result. You know, sometimes I share the studies with you like I did when we got started here. I'll share studies that are sort of relevant. That one was nasty. You do not want the Fed to cut rates. Hopefully they don't, so we'll see what happens. Do you have a call and put options video? I don't think so. No, I know our customers keep asking, could we just sort of go over that? And I promise I'm going to make it just one of those weekend days where I come in, just turn the camera on, and whoever's there in the dojo can participate. I'll let you know, but that's just, it's not one of those things I can just talk about for 5 minutes and walk away. I get so excited. You got oh, Josh, there he is. So it was Baba, that's right. So you got the 173. Was this the one? I believe this is the one from yesterday. Expires on Friday. Same thing. Now, today was decent. You like the sound of that, but you got, of course, that 50-day resistance overhead. That's going to hurt. 173 is not bad, and since you only have till Friday, what's the worst that can happen? You've already lost what you think you're going to lose. You got a little bit back today. I'd give it a shot as long as it's not too large of a position. That's usually when, like back in the day when I would do that, I'd go, well, it's Tuesday. I took a shot. I didn't make it. I'll just let it go. It's either going to expire worthless or I'm going to get lucky and become sort of a lottery ticket at that point, which is essentially the odds that you have. You're thinking a steel. You like the steel stock. Thinking AKS long for the long term. Any thoughts on that? I know it's been a tough space. We haven't talked about it a lot because there hasn't been a lot that looks really good in there. Same thing. If you like the discount, it's great. Just look at look at where they're at financially. It's a little rough, so careful. Or if you're interested in other areas of that steel category there, maybe I would start there and just sort of take a look at what other choices you have. Yep. Any thought about the overall market situation, bullish, bearish, or neutral? We have to say bullish for now. There's no other way to look at basically a straight uptrend all since the beginning of the year and then a direct reversal since June. So you have to assume bullish for now. There's really not enough there that says, oh, we're about ready to crater, crash, pull back hard, whatever the keyword is you want to use. Yeah. Any particular reason you don't use Vanguard ETFs? I've got one in there somewhere, don't I? I don't have anything against them. I just like to go with the most popular ones that have the most liquidity and also the most options liquidity because I get a lot of questions on that. A lot of the Vanguard ETFs, they're not that popular in the options market. Not that that's a problem. They're great products. A lot of them are just super identical to exactly what I show on the screen there. And I know I've got one in there somewhere. There's no reason I couldn't. These are the more active symbols for more of the, the active guys that there's all the volume there. NUE. Oh, good. You guys are helping each other out. I like it. What asset allocations are tax friendly in your brokerage account? Meaning, like, is there something you could buy that offers a better? Do you trade futures at all by chance? That would be Myoa. I'm not sure where you land. I'm just obviously taking shots in the dark. I couldn't tell you if you're, but do you trade futures? Those have a little bit of a tax benefit there in a brokerage account. That I don't know. If you say yes, we can go from there. If not, no big deal. How do you sell premiums on stocks after? Oh, you mean sell an option? Yeah, you got to have 100 shares if you're going to sell covered calls. You would have to technically have you'd be short shares, at least 100 shares if you wanted to sell covered puts, if that was your thing. A little odd there. But if you're going to do anything naked, then you don't actually have to have the shares. You could sell naked calls, naked puts, strangles, and all that stuff. But if you're asking that question, you're just getting started, right? So anyone that's just getting started in the options world and has like a longer term account, covered calls. As simple as that. Just do covered calls because you already want the shares, right? If you bought shares of something, you obviously enjoy the company, you have a belief, you have a directional bias, then when you want to, then you can sell calls and not worry about running into any issues because you had the shares that you wanted. The calls are sort of bonus. If all hell breaks loose and the stock falls, well, you were going to own the shares anyways, so you get to kind of experience that. So that's where I would start, 100%. Don't fall for the other stuff just yet. Get a good grip on it. Does it make sense to start saving for retirement if you have student debt? Should paying off the debt be the primary objective? I don't care. So everyone's a little different, right? Warren Buffett likes Coke. Don't know how he drinks that stuff, right? I don't get it. I'm not going to drink Coke. But does it make him wrong for drinking Coke? No, of course not. So if you're the type of person that says, I can make my student loan debt more than comfortably, I can enjoy my life, I can afford any kind of an emergency, and I want to start investing, great. You guys know where you stand. If you have student loan debt and you can barely pay for it, and you have bills that come up and stuff, okay, that's a different scenario, then don't invest, right? Just don't do it. So it's such a hard question to have a solid stance on. I get it that Dave Ramsey is all about paying off debt first, then investing. And that's okay. Some people that I talk to, they say, once I pay the debt off, I'll give you a call, Dustin. I talk to tons of people that say, I just can't wait. I can pay the student loan debt. I can pay extra on the student loan debt. And while I'm doing that, yeah, it'd take me 3 years or whatever, but I'm going to get started investing. I don't really chastise anybody for wanting to do one or the other. I'll poke and prod a little bit and see how much money do you actually have to pay the debt should something go wrong in your life? And as long as you're good to go, then I'm okay with it. It's got to be an individual decision. Yeah. For the purposes of pursuing an oversold stock in the short term, is there any additional metric to look to provide further confirmation of a true RSI? Oh, you're going deep there. You could use a combination of them if you like. For me, you use the indicator or oscillator or moving average that's most popular on the product that you're following. You get to know that over time. You just sort of get to know it. Like I mentioned the other day, gold and the RSI is just the most popular way, most popular indicator that people use. But if you're pursuing an oversold stock, price is a big one. Price and volume. If you can watch price and volume in addition to your, and you like using sort of those other indicators, great. But price and volume, just taking a look, what it do today, what it do today, what it do today. You'd be surprised how good you get. When I comment about the stock market every day, and I'll pull up the S&P 500 and go, it feels like we need to take a break. And then, like we've seen, the markets take a break. It's just from seeing it every day. I don't have any magic sauce. I'm not somebody special. You just see it every day and you understand, you get the feeling for what's going on there. And what everybody else is thinking is the long answer to your question. I wish GE the best. I know there's moments where people get excited there. I wish the best for them. I like the technical chart there where it's starting to kind of go sideways. That'll attract a lot of breakout players. Other than that, I haven't really followed it. Yep. Oh, wow. Sorry about that. What do we hit? Yeah, you can follow Dave Ramsey's. Anyone that motivates you to do the right thing, that's cool. I'm totally cool with it. But what's right for you, individually, what's right for you? So crazy that you, well, yeah, that's a whole different topic there. Student loan costs. Never heard of him. Keslowitz. If you're referring to someone else or a service, it sounds familiar, but I've never heard of it. Seeing info that bond funds aren't necessarily tax-friendly in a brokerage account, so offset. Oh, yeah, if you're in a brokerage account, of course, categorize. I did a video on this in the past. It might be a good idea to do it again. How you take the different asset classes and go, okay, if I have a Roth, if I have a traditional, my 401k at work, I got a brokerage account. If you're one of those people, how do you categorize what investment should go where? A lot of people just go, well, I'm going to do this investment strategy in my Roth, this strategy in my brokerage account. That may not be the case. You may want to look at everything and say, okay, I've got these different buckets that each have their own pros and cons. Why don't I take my growth stocks and put them over here? Why don't I go to my 401k and just try to save as much money as possible and make that thing aggressive? So think of it as one, although there would be multiple accounts there. I know, I got what you're saying there now. What's happening to the small caps? Not a whole lot, right? They just won't seem to get going there. I started putting together a chart of all the stocks in the small cap sector that were making new lows today. Just ran out of time. Small caps and micro caps are your weakest at the moment. Yep. If you follow like the top 13, 14 different indices and ways to track them, small cap and micro cap, not doing well. Do you see corn futures going real high? Aren't they already high? Are you not happy with where they're at already? Do you think they're going even higher? Now, I'm not saying it looks like a Bitcoin there, but corn, wheat from the other day, I'm trying to pull it up. It's not loading for some reason. That's a tough one, right? Because all of that has already sort of been priced in, right? You know what's. I'm assuming you following along, you know what's going on. A lot of that's been priced in. That's done really well here since obviously May. I don't know why it's not loading for me. I can't look at it, so I'm going by memory. Don't beat me up if I didn't get it right there. But corn and wheat and everything, that seems a little overpriced. I don't know. MO says, which brokerage is good to open? There's no real like great answer there. It has to be somewhere that you're comfortable with. Look around, right? A lot of people go and they'll do something purely based on cost. And I think that's a mistake, right? Because if you're using Robinhood, great company, nothing wrong with it, but maybe you don't like the way everything looks and maybe you don't like the features. And so compare that to wherever you're looking, E-Trade, or if you're more active, TD Ameritrade, call them up, haggle a little bit, get a better deal. Kirk says, oh, you guys are talking to somebody there. Yeah. I'm curious what you feel about BMY. It's an interesting place to be. The news is a bunch of wanting to buy another. Supposedly, yeah, it's conflicting news day by day. Will they, won't they? Is this going to spur some sort of merger war in the space? And then you have people that argue it. I haven't really seen much new, so I don't have any new thoughts on BMY. I didn't see what it did today. Let's see where we land here. Almost 52-week lows. Didn't come up on my 52-week low list, but I see it there. If you like discounts, man, boy, that's crazy. That's a mover. Normally not very much of a mover. Oil stocks seem to be booming. They are because they broke a technical area. See, now oil's a whole different thing. Oil trades in a very trend and technical way. And yesterday, we pointed out that it broke through that 50% retracement area. Today, it had the help, of course, of the oil inventory numbers, a lot of help. But that helps it continue. Oil, very much a technical trader's landscape. You've got to be comfortable with technical patterns, price support, volume, and everything to play along, because the guys you're going to play along against are very good. Very good. Yep. Oh, I have no idea. Which index will perform the best over the next 30 years? If I had to guess, maybe I'd choose the NASDAQ, but I have no idea. Yep. Remember, they adjust them along the way. Let's move on. Kirk, yeah, you lived in Florida. All right, cool. You use Edward Jones if you lived in Florida. So you're saying if you lived in Florida, you'd use Edward Jones. Cool. I don't know what to say. They all have their own little branches and everything there. You're buying, okay. You're buying ABBV, huh? So you like the whole idea there of what they're doing and sort of buying up those companies and maybe buying a little bit more. Gotcha. And you like MO. I don't have any thought off of that. Yesterday's comment about buying ABBV, you never buy a stock after only the first day of a new move. I'll keep that comment. Yep. You like discounts? Yeah. Good. Good. Nice. Well, I appreciate everything. I have basically covered everything I need to cover with you. We'll wrap it up from there. I covered the earnings for tomorrow. We covered GDP coming out. You got pending home sales coming out as well. That'll, because of what happened with new home sales, that'll be a focus. And we'll wrap it up from there. I appreciate you guys watching. And yep, we'll see you later.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.